Hi, this is Greg Johnson with Blue Book Services. I'm joined today by Mark Campbell, CEO of ProduceIQ. And Mark, your weekly analysis piece this week shows record low prices, but there's more to the story because it's not just lowest overall, it's lowest for this time of year, right?
Yeah, that's right, Greg. And thanks for having me on. The markets at this time of year, usually around week 51, are about 15% higher than they are during the average prices for an entire year. So if the industry is trading at 84 cents a pound overall for the entire year, they should be at 96 cents. But we're seeing them trade closer to the yearly average. So they are at a 10-year low, but it's more like what prices are during an average point in a year.
While retail has been boom time this year, food service really did kind of catch up this summer, but this fall and early winter, that's not the case. How is that affecting demand and overall price structure?
Yeah, we're definitely seeing a decline from food service as the weather got cold and outdoor dining became impossible. And the really interesting thing about produce markets is that these small changes in volume can make dramatic changes in price. And so a little bit less from the demand side and prices hang out below production costs. So the pandemic is really proving to be the problem of the winter.
Now, talking a little bit more about demand, why do you suppose demand is so low when it's such a time of year with high demand? I mean, we're still going to celebrate Christmas and New Year's.
Yeah, part of it is a real shift. Christmas Day itself is one for home holiday gathering. So retailers often report that December 23rd is the busiest shopping day of the year for them. But surrounding it is food service. And there's also sort of a shakeup in which items are in high demand and which ones are not at high demand, depending on whether or not they're traditionally food service items. And so overall, that's causing a disruption. And we expect that to continue. Unfortunately, the food service pickup just isn't likely to happen as normal for this New Year's.
What about after New Year? January is probably a little bit slower, so historical numbers would be a little bit lower, wouldn't they?
Yeah, there tends to be a lull after January 1st as people clean up inventory that had built up during the New Year's week. However, we are seeing that because buyers are being cautious in regard to they're not overbuying and filling up inventories, they might run out of product and need to have a quicker uptick right after the new year.
So that would change the demand dynamic, wouldn't it?
Yes. Right. I mean, it all has to do with inventory levels at each level. And if they're not running high inventories at the destination, then they're going to need to pull quicker as soon as the events are over. And it's more of a just-in-time process of filling the supply chain, because there isn't that level of confidence of, let's buy and fill the cooler, we know we'll sell it. And so they're holding back, and that might create a quicker recovery after the new year.
Okay, well, Mark, I think that brings some good example and analysis of this report to our market and our audience. And I look forward to talking with you after the holidays, and we'll see what happened and what we're projecting now.
Thanks, Greg. Appreciate it.